Financial services is now a key growth area for mobile network operators. Vodacom's most recent results showed financial services revenue up close to 30% to 9.9 billion rand. Mariam Cassim, who's CEO of Vodacom Financial and Digital Services, joins us now to talk us through its positioning within Africa's growing financial services space. Mariam, so good to have you with us today, and I'm going to launch straight into it. Safe to assume that expanding from being a mobile operator to becoming a key player in the fintech space is as simple as there being a clear synergy that's inevitable, right? Considering that you've got access to millions of your customers through the palm of their hands.
Yeah, hi Alishia. Real pleasure to be talking to you today. And I think you've hit the nail on the head. One of the most frequent questions that I've been asked in my 7-year tenure at Vodacom, having come from the traditional financial services space, is, okay, so why financial services in a telco? And, I always narrow it down to 4 main reasons. I think the first reason is just telcos have a significantly strong, loved and trusted brand. And if you think about the Vodacom brand across the African continent, that's exactly what it is. And customers have immense trust in the brand, and that's very important for financial services as a category. The second asset, I'd say, is the access to the immense customer base. If you take the Vodacom opcos across the African continent right now and the markets within which we operate, we have access to just over 500 million people, which is, almost half the African continent. So a significant big asset that we can leverage there. The third one I always say is access to distribution. In every market that we operate in, our products are available within sometimes just, a 50-meter radius. So wherever you are, there's a retailer available or a distributor available of our products. And how do we leverage that amazing distribution for financial services products, which, as we know, traditional financial services providers struggle with, because your cost of acquisition can be quite high in acquiring a customer. So that helps us from bringing down the cost of acquisition for our financial services products. And then finally, and my personal favorite, is the asset of big data and the immense amount of data that we have on our customers. Right now, today, as we stand, we know over 10,000 things on every single one of our customers. I struggle because I don't really know 10,000 things about myself, but this is what we as a telco know on each of our customers, and how do we leverage that immense amount of data to create products and services that are personalized to customers at a cost that is way below what the traditional market is offering it at. So those are the main reasons, in my opinion, why you would want to have a fintech in a telco.
Of course, when we're looking at the revenue growth we're seeing, there's an element of a low base effect to consider here. But Vodacom is targeting 30% of revenue coming from new services, including financial products, over the next 3 to 5 years. It's already sitting at about 20%, I think. So talk us through that target that's been set and how much of a contributor financial services specifically becomes in that equation.
Yeah, so your numbers are absolutely correct. And as you can see, that's been achieved over, I'd say, if you take M-Pesa is 16 years old this year, so it's been a 16-year journey, but I'd say largely accelerated in the last 5 years across all our markets in terms of financial services as a category. The aim to get to 30%, absolutely. I think, that's a fair challenge and will significantly help the telco in terms of diversifying revenue streams, especially because we know the telco industry is under pressure. And, how do we ensure that we're still giving shareholders the returns that they're looking for and helping to diversify the revenue streams? So absolutely on track to achieve the 30%. I'd say financial services should be more than 50% of that going into the future. A very big target ahead, but just really excited on our side to have the opportunity to, do what we do in a space that is just so conducive for growth.
Absolutely. And as you alluded to at the top, this is where mobile money and data are structural growth drivers in Africa, right? And with more spectrum, quite simply, more opportunity to tap into that growth profitably as you move forward. If we home in very specifically on VodaPay, what uptake and growth are you seeing, and what exactly are customers tapping into with this super app?
Yeah, so the way we describe VodaPay as, or the way we describe a super app is that it's really just a massively large digital shopping mall. So exactly as you would have a physical shopping mall, that's exactly what VodaPay is, just in a digital space. The super app is now just on 2 years old. So, we refer to it internally as our little baby that's now starting to grow up. We're just over 7 million downloads in South Africa. It's an app that is available to every South African, so you don't have to be a Vodacom customer. So really driving financial inclusion in that way and ensuring that absolutely no one is left out of the ecosystem. And, we've even taken it one step further to ensure that you're able to purchase not just Vodacom products from it, but competitor airtime and data on VodaPay as well. So the last 2 years have been very much about ensuring the stability of the platform, continuing to bring on as many new products and services as we can. So we have a whole host of other things that can be done on VodaPay, everything from bill payments, prepaid electricity, prepaid water, pay your traffic fine, pay your DSTV bill, etc. So your sort of daily use cases that you would need to do. Outside of that, we have the mini app environment, or the e-commerce environment, as we refer to it, with just over 100 mini app partners. And these are really just e-commerce stores that customers can go into and purchase. And we cover a whole host of categories, from groceries, electronics, travel and tourism, fitness, food, leisure, and we continue to build into these categories to give customers a real holistic ecosystem within which they can transact.
But bottom line, how do you see this impacting financial inclusion and helping drive digital disruption as we move forward?
Yeah, I think a great question. And, I'll maybe talk to two unique use cases that we've recently launched within VodaPay that I believe helps to drive financial inclusion significantly. The first one is our consumer loans product that we've launched within the VodaPay environment. So this allows consumers to get access to unsecured lending, a really first in the country, from as little as 50 Rand to 500 Rand in a very seamless, digital, paperless way. Customers are able to come in. How do we do this? We leverage very sophisticated credit scoring that we have in the background. And through this, we're able to advantage our customers by giving them access to credit in a very cheap way, or rather reduced rates that they would ordinarily pay for unsecured lending. How are we able to do this? Our credit scoring algorithm utilizes the immense amount of data that we already have on them, and this works to their advantage to ensure that we're not just doing a blanket scoring, but we're actually scoring for their personal behavior, and so they get advantaged by that. Secondly, we've been able to significantly reduce the cost to the customer because it's a fully digital experience. The cost of acquisition is really low, and we're able to offer this saving back to the customer through reduced interest rates. So that for me is a real product demonstrating financial inclusion, giving customers access to finance, which we know is one of the big inhibitors.
As you touch on this, what was certainly interesting in the latest set of results that came through was that it was insurance growth that underpinned the increase in your financial services revenue for the 6 months to the end of September, right? Were you expecting that, especially in the current climate where, insurance grudge, there's always been a correlation between the two?
Yeah, I'd say our insurance growth came from two products in particular. Our device insurance continues to penetrate our base. I think there's a greater need for this product, especially as we see the cost of the smartphone continuing to increase. These devices are becoming more and more expensive, and in a market like South Africa, consumers are seeing the need for insurance more and more. So the device insurance product continues to grow. The ability in which we manage the claims on these devices is significantly different to the way traditional insurers do. And I think that again gives us a great competitive advantage in decreasing the cost of claims, which means that value can be passed back to the customer through improved pricing. So that's been a significant change that we've done on the device insurance side. On the funeral insurance side, we've got a funeral insurance product, which again just continues to scale and penetrate the market. And, with the popularity of funeral insurance in South Africa, we still believe that there's great opportunity to penetrate this market even deeper. So yeah, those are really the two big products that have contributed to the growth of insurance.
Look, I know up to this point we've been talking about the significant growth you're managing to see, right? But we've also got to, pay mind to the fact that competition is stiff. We had MTN recently sell a stake in its financial services business to MasterCard. I know Vodacom CEO Shamil Joseph's made it clear that Vodacom hasn't made any decisions to pursue a potential sale, but what it is pursuing are partnerships with like-minded brands, right, Mariam? So Alipay to create VodaPay, Bidvest to power the VodaPay wallet, and Old Mutual Finance to offer personal loans as well. How did you choose your partners, and why are partnerships important to Vodacom Financial Services in this bulking and muscling up?
Great question, Alishia, and it couldn't be more timeous given the current environment that we operate in. I think if this question was asked maybe 10 to 15 years ago, the answer may have been different. I think the times that we operate in today, where the external environment is changing and evolving at such a rapid pace, organizations that want to be successful have to have the humility to admit that they cannot do everything themselves. I think for organizations who believe that they can do absolutely everything and keep up with the pace of evolution, it's really a unrealistic expectation. I read an interesting stat around the number of startups that have penetrated the African market over the last year or so has been just over 5,200, of which 50% of those have been fintechs. So our view on partnerships is that the real growth is going to come from organizations who can move quickly, who can move swiftly, who can move in the most cost-efficient way. And sometimes that may mean doing things yourself. Other times it may mean partnering. Our partnership approach is two-pronged. I'd say on the one hand, we have a very clear strategy around partnering with young fintechs who, to be honest, come up with such innovative solutions. A great example of that is our partnership with a fintech in South Africa on our SMME lending product. They developed a fantastic product that allows small business owners to get access to loans in a seamless 10-minute application process. And within 3 to 4 hours thereafter, the small business owner has a result as to whether they've been successful or not, completely disrupting the application process for SMME lending. That's a great example of partnering with a young fintech, and we're able to 2x, 3x, 4x the size of this fintech's business because of the brand, the trust around the brand, and the scale that we come with. So that's partnering with fintechs, and that's something that we continue to do. And then simultaneously, we continue to partner with large corporates or large organizations or large brands who we really believe are the best in what they do. And so, to your point, take the Alipay platform. We really believe Alipay are the global leaders when it comes to super apps. And so as a result of that, we felt we want to go for best-in-class technology to ensure that our customers have the best experience on the app. And that was the reasoning behind the partnership with Alipay. On the personal loan side, there's some areas where we have a strategic decision around taking balance sheet risk in the lending space or operating within the confines of the National Credit Act. And so partnering may make it easier for us to attain our goals in that space. So it really is a decision based on the product proposition at the time, the timing, the amount of investment we have available, and really just who's best at providing that service at that point in time.
Absolutely. And it's, so significant what you say here, because the amount of time I've had now of the recent months heard this whole translation happen when it comes to competitor versus collaborator, it really is just showing the kind of stride that is being made in the market and how various players are looking to win within it, right? As I let you go and wrap this conversation up with you, Mariam, very quickly, any insights into some of the new strategic growth drivers you're chasing? I mean, what are some of the key drivers behind your growth path moving forward now?
Yeah, Alicia, I think it's really just continuing with the focus. What's driven our success up to now is just having a very niche set of products, focusing on a very niche customer segment for those products, putting the customer at the center of everything that we do, continuing to retain and build on a very young, dynamic, motivated, competent team who just have innovation, disruption, and financial inclusion at the heart of everything that they do. And really just continuing to scale the immense amount of products that we launch. You know, the last 5 years for us as an organization has been very much about product build. I now believe that we've launched a significant set of products that are just perfect, you know, in the way that we want it to be for initial launch. Of course, we continue to improve upon it, taking customers' feedback, etc. But the next 2 to 3 years is really just all about scaling and penetrating deeper.
Absolutely. Well, let's leave it there, Mariam. Thanks so much for having joined us on Smart Money today. It's been an absolute pleasure catching up with you.
Thank you, Alishia. A real pleasure talking to you too.